Good morning, everyone. How are we doing today? Saturday, June 6th. And yes, we do daily financial news 7 days a week. And yes, 7 days a week means we include Saturday. So if you like getting your financial news in the morning, do me a favor and hit that subscribe button, thumbs up, all of that good stuff. Today, lot of interesting stuff, most of it being a look back to Friday. First and foremost, kind of shout out to those that have been investing in the stock market, specifically if you've been putting new capital to work for the last 8 to 10 weeks. You probably looking pretty good. I just took some numbers down because I was shocked at some of the results. For example, American Airlines was up 77.1% in a week. American Airlines was kind of singled out very early on as the airline with the most debt and was highlighted as the one that, hey, you know what, if we're going to lose one, American Airlines was very quickly selected by the market. But when you get the Fed behind you and the Fed gives you billions of dollars, allows you to raise capital, you have a pretty nice backstop. So up big time. And then they came out and talked about adding new routes, basically showing very early signs that the airline industry is back. Let's just remember headlines can be misleading. By all accounts, airline traffic is down over 80% across the board. So when folks talk about even a doubling of passengers, it's still 60% below 2019. We are going to see some very encouraging statistics probably for the rest of the year across lots of things, airlines and hotels being the greatest example, right? If a hotel goes down to 90, loses 95% of occupants, it could theory show 500% growth in occupancies and still be at 25, only have 25% of the rooms filled. We're just going to have to watch this. The headlines are going to be purposefully skewed towards percentages versus absolute numbers. So just be careful. Another big winner of the day was Chesapeake Energy. It seems just like yesterday, oil was trading at negative $37 a barrel as the futures contract expired. I have oil down somewhere else here, close to $40 a share. Frankly, most US-based oil producers can at least break even at that. $32 was the number, if I remember correctly, from a few months ago when I looked it up. So again, the oil industry is coming back, which is just nice to see as states open up. Apple, just to also talk about one of the FANG stocks, Apple hits an all-time high yesterday. So again, if you've been investing in the stock market, you have belief, congratulations. It's been a fun ride. Don't forget that bulls make money, bears make money, but pigs get slaughtered. So don't, be careful. But again, congratulations. That has to feel good. A couple of other things. What I'm looking for, because I think a lot of the discussion today and really the last 24 hours has been about the employment number. And I think most folks have the unemployment number wrong. What I mean by that is a lot of people are talking about how the number is constructed, why it's different this time, why you can't believe it. Well, I've been watching that number for years, and if not decades, and it's always noisy. It's always got problems. It's always got all these factors in it, right? The number has been put together in this way for long enough for me to say, it's what is for me is it's a trend line, and what we just saw is an inflection point. And what I am looking for now is a real estate investor who looks at the consumer and cost of capital, right? That's what I do every day. I am looking to see if consumers see this good news and get even more encouraged, right? We have had a bad 10 weeks, 12 weeks, and we are on the hunt for any bit of good news. And without question, yesterday was good, even though you could still say we're above double digits and all of that stuff. In order to get off the bottom, you got to turn around, and I think yesterday was the turnaround. Uh, so we're going to be looking for the animal spirits, see if consumption, see if investments. We're going to really see if risk appetite increases. We all know that there's been a skewing of investment in the top 5 stocks, right? I think the top 5 stocks were 20% of the S&P and some larger percentage of the NASDAQ 100. So we're going to see if there's a rotation out and this starts to broaden out. And then we have to watch interest rates. That 2-10 spread was amazing to watch yesterday. It started the week, I think, at 0.65, and the 10-year is now close to 1%. So that eventually is going to impact mortgage rates. Mortgage rates will go up. They might be down or be held down slightly in the short term, but the Fed is going to hold the short end down, but they're not going to be able to impact mortgage rates. Mortgage rates are going to go up. And if mortgage rates go up even 0.5%, that's going to start impacting cost of ownership and things of that nature. So watch out. That's what I'll be looking for. Clearly, the employment number yesterday kind of highlights that the stock market had it right, or at least early perception is this V-shaped recovery. You can see it in the chart. I mean, it's you can't call it anything else but a V. It's not a U, right? It hit the March low of whatever it was, March 23rd, and bounced off like a trampoline, right? It's almost near the peak. So, I mean, did the stock market have it right? Did the Robinhood users have it right? And all the billionaire hedge fundy kind of guys had it wrong, including Warren Buffett? It's going to be interesting. There's actually an RBC economist named Tom Porcelli, Porcelli. He came out, I think it was this morning, certainly this morning when I read it, and said, watch out for June employment numbers. He said they could be as high as 10 million, meaning 10 million additional jobs added, not subtracted, added. That's on top of the surprise May reading of 2.5 million. So this is the highest number I've seen to date. I expect other numbers to come. But this really could happen. If you look at the May numbers, it's pretty well publicized that the May survey was done in the middle of the month. We have had significantly more states open up since then, and New York and California are opening up now, the big population hubs. So, yeah, Tom from RBC, he could be right. We could see 10 million jobs added in a single month, which would be fun to see. But I think in the end, the job recovery has started. And, we can all argue about where it currently is. It's at, I forget, what was it at 13.3%, double digits. Is the number really 16 or not? Again, I think you're missing the point. It's going to get better from here. The debate we should be talking about is how long it will take to get under double digits. I think that's a psychologically important number, because in the Great Recession we peaked at 9.9%. So I think below 10% is important. So I think that should be a discussion. And then when do we get under, 5.5%, 6%? I think is also an interesting point. Do we get to 3.5% unemployment? No, I don't think that's even part of the discussion. I think normal unemployment rates, if you go back to to my Econ 101 degree, it's right around 5.5 or 6%. So I think we need to start asking ourselves, when does it break 10%, and then when does it get under 6%? Those are the current discussions. I do not see unemployment rate kind of reversing, so that's a good thing, and that should just be considered a good thing. And I'm not here to argue is it 13% or 16 or whatever. I think we're improving. On another side, the American Bankruptcy Institution did highlight that bankruptcies, or i.e. Chapter 11s, went up 48% year on year in May. Most of those small businesses, the article highlighted that the only one of note of size was Hertz. But again, there's still a lot of pain. A lot of people, a lot of businesses running close to the edge that couldn't get through the cash flow crunch of really no demand for 2.5 or 3 months. So lots of pain still out there. More pain to come. But again, it should be getting better from here, which is I'm just so happy to say. I did see Roger Goodell, the NFL commissioner, come out yesterday with a mea culpa and admit he and they were wrong about what was going on. So I thought that was that really just shows, at least that shows that the change is being acknowledged as something that we all need to look at, because I guarantee you the NFL and Roger Goodell were not looking forward to doing that. But when you're wrong, and he admitted that. On the oil front, again, we talked a little bit about oil when we talked about Chesapeake. OPEC and their allies have agreed to extend the production cuts for another month. They were set to expire in June. They are now going to July, end of July. That cut is 9.7 million barrels. That's a very wise move. You don't need oil going down to sub $20 again because you turn on production too soon. Oil is getting close to $40, and here it is, $39.55. West Intermediate crude, I think it is. So again, oil's back to $40. Again, the economy is opening. People are getting out. So it's just good to see. I like to smile, and this makes me feel pretty good. I think a couple more things to talk about. First off is the next and final round of stimulus is going to be a pretty hot topic the next 30 days. I think it's pretty clear from both sides there will be stimulus round number 4. It's not clear what will be in it. There will be lots of horse trading. When you hear the Senate is talking about liability protection, another check, right? Another $1,200 or $2,000, right? There's talk about how much. They do want incentives for restaurants and entertainment, which I think is an interesting idea. I think this tax year you can only deduct 25% if you take a client out, and they want to do it 100%, which frankly makes sense, right? If you want to spur restaurant and entertainment, that's an interesting idea. I give them credit for that. And then the Senate wants to help hospitals, right? Hospitals' income statements have been crushed in the last 3 months. So I think there's general acknowledgement that there needs to be some help for hospitals. If you go out to the House has a whole different list, and frankly bigger list. They want to help state and local governments big time. They want to help the unemployed by extending the benefits from July to some further date. So it's going to be a lot of horse trading. I think we need to wait for what the Senate proposes, because we've had the House bill, $3 trillion bill, for quite a while. It will be interesting where this goes. I do see something happening, probably happening this month, you would hope, because again, it takes a while for stuff to hit the street, so it will be interesting. And then finally, on Market Watch, which is a site I read on occasion, they had a money manager, Ben Inker and Jerry Grantham. Never heard of them. Yeah, I could do a live Q&A sometime. That sounds like fun. Just had a question pop up. Would I ever do a live Q&A? Sure. I might do one after this and just see who shows up. Actually, you know what, Jed? After I finish this one, I will shut down and I will start another one in 5 minutes, just a live Q&A, and see who shows up. And then, so again, Ben and Jerry, they're from the Boston Fund, talking about reducing their exposure to the stock market from 55% to 25%. As I research these folks, they do talk about being generally bearish, but there's one point in the article I found interesting, and that is the economy. When you look at the S&P 500 for price to earnings ratio, it is in the top 10% of all-time highs, while the economy is currently at the bottom 10%. And I'm like, okay, well, that makes sense, right? And the great cause of this is uncertainties, kind of where we go from here for the second half. So again, these folks are generally bearish, so you just have to know who's talking about it. I think that's a fair assumption, right? The S&P, the price to earnings ratio, given where we're back towards January and February highs, and I don't think anybody here would think the economy is at that. So the price to earnings ratio are at an all-time high, where the economy is certainly at the bottom 10%. But we're coming out of it, so that is good. All right, so that's what I got for you today. I'm gonna shut this down, take a drink of coffee, and then we're gonna do a live Q&A and see who shows up. All right, everybody, take care.